or maybe what's triggered that is the fact that we saw how when push comes to shove, when there's a crisis in the system, the central banks come to the rescue, like the Fed did a month ago.
All right, we are live for a Thursday edition of the Mike and Mario Show, and excited to be back. Looking forward to connecting, Mario. It's been about a week since we last talked, but lots of things unfolded since then. But how are you doing, my friend?
Yeah, I'm doing well, Mike, and you?
Oh, I'm doing pretty well, man. As I mentioned before air, it was 80 degrees yesterday. It's just something about that sun to put a smile on a man's face. But other than that, doing well, man. A lot of overall optimism with the markets on the people who are awake and aware side of things. And it has a lot to do with what's happening with silver and gold in particular, and the commodity space in general. But so lots of things are unfolding. But I think the narrative is either shifting or the Fed is caving into their own narrative that they were trying to feed us earlier throughout the last year or two about. First it was a soft landing. Now I haven't heard nothing about a landing. And now they're admitting that a mild recession is due. So it's like, if they're admitting that there's problems, they're blaming the banking contagion, of course. But if they're willing to admit that there's something coming later this year, the question is, what will it be and how bad will it be in your estimations? But I'll start off with that. But give me your thoughts on that. That's all piggybacking on this article here about Fed expects the banking crisis to cause a recession. And so we know that that's not the cause of the current environment we're in, but it's just interesting how they're using it as a narrative ahead of time. What are your thoughts on this?
Yeah, they're like blaming everything but themselves. I would say the banking crisis happened because of the Fed, because they cut rates and they pumped trillions into the economy through their balance sheet in 2020, 21. And then they waited too long to start not just unwinding their balance sheet, but also raising rates. And that created the worst stock and bond market in probably like 100 years or maybe 80 years. I don't know exactly. And then these banks, even treasuries dropped like 25%, treasury bonds, which are supposed to be safe haven. So yeah, if there is a recession, it's because of what the Fed's been doing. They pumped everything up, and now they're trying to rein it in because they're desperate, and they made a big mistake. So the banks are just a symptom of that. But as I said to you before we came on air, I'm sure the government and the Fed, they'll do everything to keep that GDP from going negative, i.e. a recession. And how do they do that? Well, through all the deficit spending that's still going on. The Congressional Budget Office just did a report recently, and they said we're going to get over 5% budget deficit in the current fiscal year, and it's going to keep stay in the red for up until 27, 28. It's going to drop a little bit, and then it's going to get out of control by 2033. They expect the national debt to be 50 trillion. So they can always paper over things with spending. They could find another crisis to spend more hundreds of billion through the military industrial complex, or bail out the banks again. Who knows?
Yeah, and speaking of which, just this headline here: deficit tops 1 trillion in first 6 months of the fiscal year 2023. So there's no end in sight to this debt Ponzi scheme, but just the narrative of like them blaming the banks. Like, what better excuse could they use, given the fact it's the most relevant, and we haven't really even seen the full effects of this contagion because it's kind of died down over the last couple of weeks or whatever, for whatever reason. I guess it has a lot to do with the Fed's extra windows and all those swaps and all types of things they've done behind the scenes. It's quieted it down a little bit, but the problem still persists. Now, if it goes to the point where a mild recession is coming at the end of this year, and I'm seeing a lot of other forecasts talking about mild recession, but then again, the current environment we're in now we've never witnessed anything like this in modern history. So that lets me know that what probably lies ahead will be well beyond a recession. It might be on the brink of a I like, unfortunately, I use the word crash, not a soft landing, not a hard landing, but I've used the words a crash and burn scenario because that plays into the shift of this happening around the world, especially with when out east, whatever. But if we get into the end of this year and there is some type of event, then what? Like, then what will happen from that point on in your estimates? Like, as far as them trying to, will they officially pivot and go QE again? Or that's what kind of, I'm trying to figure out how to walk through this scenario of them admitting that a recession is coming, but then what will their response be when it gets here, according to their own measurements, you think?
Well, I don't think they're going to be too concerned about like a recession, a shallow recession if they get it. But what they can do if there is another crisis, another accident, like we've seen here in the UK back in September, October time, they just came in. Bank of England came in and intervened with more not QE, right? It's like they're putting out fires, and they keep saying, well, we're going to keep tightening. We're concerned about inflation. And that's the same thing the Fed has done recently. They increased their balance sheet by almost 400 billion in a week to save, to calm down the banking contagion. And it could happen maybe next week or in a month's time or 3 months' time. And I'm not sure they would pivot, but they would do some kind of new program and say, oh, this is just temporary to calm financial conditions, but we're still going to keep tightening rates because we're concerned about inflation. And I think that's how they'll do it because, and I think they're going to have trouble with what's called inflation. The reason I do that is because I see inflation as the creation of currency and credit out of thin air.
Right.
Most people see it as a rising CPI, a high CPI. And I think we're going to get a rebound in the CPI. I know it's dropped back down to like 5.1%. We had the numbers yesterday. We saw PPI drop today. But if you look at the price of oil and the chart of crude oil, it's turning back up. We've had like a 12 months or 18 months of a rest in the commodity bull market, but I think it's going to pick back up. I could see crude oil go to like $150 to $200 in the next 18 months to 2 years. So it's going to be really interesting times.
Now, given that the end of this year we're expecting some type of event, I wonder, is that what the metals market is sniffing out at this current time frame with all this positive forward movement in the price act, gold and silver continuing to trend upward? Do you think that literally people from not domestically but globally are starting to sniff? Because when we looked at this a moment ago, it was 57. Now it's 70. Is it 225.77 for silver spot price as of right now? But if we get into some type of event by the end of this year, then literally based upon the current trajectory of silver and gold at this current moment, what could that dollar USD price be looking like at that point if something breaks in the system? In your estimations, what do you think?
Well, back in 2020, gold, silver, and commodities and the stock market, everything crashed in March. But gold and silver were the ones to pick up before everything else, before all the major commodities. As you see there, silver went from around 12 to 30 in a matter of months. So they were forecasting the inflation in commodities, not inflation, but the rising commodity prices. So we could be seeing another bout of that, another forecast by gold and silver that prices are going to rise again, especially for hard assets like oil and, all kinds of energy and soft commodities. And I don't know what the event is going to be to trigger that. Or maybe what's triggered that is the fact that we saw how when push comes to shove, when there's a crisis in the system, the central banks come to the rescue, like the Fed did a month ago with all their new programs, this bank term financing program, BTPF.
BTB, yeah.
And then we saw they did not QE again, 400 billion. And we're seeing that the new head of the Bank of Japan, Governor Ueda, he just took over like at the beginning of this week, and he said he's going to keep the same policy as Kuroda. So they're gonna keep printing as well. The Japanese, they're gonna, and that's gonna, like, I think that's what gold and silver are seeing, that this they're going to be very because the only way I think to bring down inflationary pressures is for interest rates to be in double digits right now, because I don't buy that 5% rate of the CPI, and here in Europe we still have double digits in the UK. So we need, I mean, I'll give them the benefit of the doubt, but if they really wanted to stop inflation, the Fed funds rate should be around 7.5 to 8. But can you imagine them doing that, 7.5 to 8?
Yeah, no way possible. So you mentioned about, you know, that like this, what the trigger might be, or what the event might be. Based upon current sentiment, and especially with this price action here, I would imagine it's already in. Like, you know, the trigger's already been pulled. Maybe it was the banking event that really led people to question the stability of the banking sector, and they've already started allocating and moving funds out of currency, especially, and into some sound in the form of metals or whatever. So probably already underway, and we're starting now to see the results of that, to where, you know, you mentioned before we went on air about, you know, once silver get above $30 or so, you know, hey, watch out, like all hell will break loose. I remember when we were doing our initial breakout, I remember people saying if they get above, I think it was they put 35 as a, you know, the TA chart saying 35, then all hell would break loose. But, you know, we didn't get that. But, you know, yeah, it'll be interesting to see if we get that.
The other thing that gold and silver could be forecasting is this debt ceiling impasse, you know, because it seems like the Biden administration is pretty adamant that there should be no conditions, that Congress, the House, should just lift the ceiling, and the Republican controlled House doesn't see it that way. I saw that Warren Buffett, you sent me that article, doesn't seem to think it will be a problem, but who knows? The current administration has made so many mistakes and so many blunders. I mean, the top one that I think so far is the withdrawal of U.S. forces from Afghanistan in 2021. So it wouldn't be out of the question that it would be the administration that leads to the U.S. government defaulting because of not raising the debt ceiling. Because back in 2011, we're very close to that was the really last big debt ceiling crisis, and gold and silver went through the roof. That's when silver went to $50. So maybe that could be that too.
Yeah, it's going to be interesting to see how this plays out, and we're just in the beginning of spring, to say the least. But let's acknowledge a couple people's super chat here. I want to put that on, forget that. But Ryan says, "Hey everybody, glad to be here. My question is: this going to lead to more inflation or major deflation? I see inflation is supposedly going down, but I also see the government spending." Yeah, a little bit of a stagflationary issue right there in itself.
I'll answer that, and then you can. I mean, first of all, inflation's not going down. Inflation still, or actually, we've had deflation, Ryan, since July 2022. And what do I mean by that? Well, the money supply M2 is shrunk, it's dropped. So what we've had is rising consumer prices as measured per the CPI. So you can have rising prices in a deflation, which is what we're having. So what prices have dropped in this deflation? Well, it's been the price of financial assets, stocks and bonds, mortgage-backed securities. And that's why we've had the banking crisis, because the banks, their assets and liabilities got screwed up because treasury prices dropped so much. So, inflation, I think we'll probably see it again. M2 is going to start picking up. but I think what he means by inflation is rising prices. So I actually see that as well as commodities start making a move higher, especially with oil breaking out, as I showed you on that chart, if you want to show that chart. And that's going to drive the whole commodity space. So, yeah, I think Ryan looks at inflation as the CPI. So I think this 5% print or 5.1 from yesterday is going to be like a bottom right now, and we're going to see it go higher.
Yeah, good analysis there. And I think clearly just the terminology difference between inflation and CPI or consumer price index, which is the measuring index they use to price all those, assets there, is what's probably confusing to where it makes, that question, which creates that question. If people knew and stuck with the idea that inflation was expansion of the monetary supply, as you love to hit on, people would even look at it from that standpoint. Consumer price index continue to go up.
That's how they've been able to inflate so much, because they've made people believe that CPI is inflation, while CPI is the consequence. A rising CPI is a consequence of inflation. But as we've seen, CPI can rise even during a deflation, which we've had. But anyhow, here in the UK, we have stagflation because our economy is hardly growing and prices are still rising. So, yeah, as you can see there, oil has been consolidating since the middle of last year. It has dropped, but we've just broken out of this falling wedge. This is a monthly chart. So I expect oil to go a lot higher. And that will mean higher prices for everything, because energy is an important part of without energy, the economy doesn't move, right? But it's not oil that's going to cause the inflation. It's the consequence of it. And I think the deficit spending and all the government spending is what's driving this, and also the Fed policy, because the Fed is has not tightened enough, even though they've done a lot. But they've been for like years at zero rate, and their balance sheet went up tenfold from 800 billion to almost 10 trillion.
Yeah. Good point there, man. All right, so here's another from Chris. Appreciate you, man. It says, if the Fed's inflation target is moved to 4 or 6%, what effect will this have on precious metals? Thanks. Yeah, and that's where, like, I don't think they'll be that dumb at this current moment. But then again, you never know.
I think people have been talking about 3 to 4%. But 4 to 6 would be like it's putting a rocket up gold and silver and all commodities, all hard assets. I mean, if you get CPI rise of 7%, I think the rule of thumb is 7% over 10 years, things double. So, but it's possible that they bring it to 3 and 4, and even 3 and 4 would affect the gold price. And their excuse is that if they try to bring it back down to 2, it's going to hurt the economy and hurt the stock market, right? I think
never mind your purchasing power, never mind the currency itself. Like, that's not the primary focal point. We don't care if you are losing while we're trying to fight inflation, as they say it. Interesting. What else? Okay, we just got some other subjects here. So I'll bring up a couple of things here that came across my radar. One of them was this article here about your guy over there in England. It says Bank of England beefs up plans for a digital Bitcoin currency, and so it looks like, regardless of what's happening with the old legacy system, they're hard pressed on continuing to lay the framework for their version of the new economy that they're trying to create. And I'm like, I mentioned about they're hiring a workforce of up to 30 people to develop the project. And I'm like, if they're telling us that now, clearly they're a lot further along than they would want us to know. And they already have something probably in play, given that if the U.S. has some type of event that later this year, it won't just be isolated here. It's going to spread throughout Europe and UK and everywhere else. And they all be on the same framework with the same narrative, of course, I'm sure, trying to come out with their version of a solution to their own problem they created. So,
yeah,
but
The yeah, they came out with a working paper in February. Um, yeah, their plan, the Bank of England and the Treasury, is to phase it in the next few years. So it's not going to be right away, and it's going to run parallel. But if it works, because I'm not sure they'll be able to bring in a CBDC if we see the kind of crisis that I foresee, a currency collapse if they lose control of things. Why would people trust them to bring in something new? Someone's got a super chat there.
Yeah, Ryan says, "Isn't the M1 money supply down? Are banks running out of cash?"
M1 and M2 are down. Yeah, banks. Yeah, I think some banks are running out of cash, especially the small and mid-sized banks, because after the SVB collapse and Signature Bank. But this also means that people are moving. They could be moving their cash. M1 is just notes and coins, right? M2 and bank deposits, and then M2 is like time deposits, like and money market funds.
Yeah.
But they could be moving that cash to M2, to money markets funds, but M2 is also coming off. But that's what deflation is, Ryan, when the money supply drops.
Yeah, and with all the stories over the last week or two about all the small regional banks experiencing problems due to that deposit limit that hasn't really been ironed out as of yet, the panic from people withdrawing, taking them to the globally systemic important banks, they're flushed with, they got more than enough, cash. It's just the smaller banks, as you mentioned, that are being in my opinion, being deliberately, this is a deliberate activity against those smaller banks just to consolidate power into the top echelon of banks. So I wouldn't doubt it if it's intentional in nature, spurred on by the current activity with the banking sector. So, all right, let's if you want, let's get to some questions in. So we already got questions out there. Let's get to some couple questions. And let me see. Get this up here. Let me see. Feel free. Let me put up here. Yeah. All right. So if you guys have some thoughts, ideas, or questions you want to share, or bring some topics to the table, feel free to do so. We got a couple of good ones already. And what else we got here? Let me know if you see anything out here. A lot of expats in UK countries.
I haven't seen any questions yet.
It's getting too confusing.
Yeah, no.
Here's Matthew says, thoughts on the total return swaps conducted through the International Swaps and Derivatives Association, how unregulated it is, i.e. Archie goes 223.
All right. Yeah, I mean, swaps are just derivatives. Like most interest rate derivatives are done through swaps. The ISDA, International Swaps and Derivatives Association, that's just like an association of all the big derivatives traders, like in the banks, big banks, and the people who make a market. Archegos, yeah, they leverage up to the hilt, and the move in the markets just killed them, and it was one of the reasons why Credit Suisse has been in trouble and got into trouble about a month ago. Credit Suisse, Archegos had a prime brokerage account with Credit Suisse, and Credit Suisse ended up losing $5 billion because all these derivatives, especially the over-the-counter ones in interest rate swaps, they're highly leveraged. So Archegos, of course, it was a hedge fund, and it went from being very small to very big to worth billions, but then they lost everything because they bet more than the equity they had, and when the market moved sharply and there was a lot of volatility, they lost everything.
Interesting. Now I want to hit. I forgot a topic that I wanted to bring up. That the tweet you sent me from Ben Rickert. I want to bring that up here, and that has to do with the BlackRock situation. So we'll get to some questions. So feel free to throw out some questions or whatnot, because I want to definitely touch on that. But here's that headline here, if I can move this over. But talking about BlackRock defaulting and how that's going to have a little bit of a
Blackstone.
I'm sorry. Yeah. So back on March 3rd, Blackstone defaulted on the Nordic-backed mortgage bonds. And so from according to what you've heard or see, what's been the spillover from that?
Well, these are mostly like funds that are private equity funds based on commercial real estate. Mm-hmm. So, and they have rules where they can sometimes freeze people's, if people want to take the money out, there's a limit. But in this case, they defaulted on these bonds, and it looks like they're defaulting on another one as of April 13th of today. Mm-hmm. It says here default on 2 more massive tranches of debt. So basically what he's saying, Ben Rickert, is that, there's a lot of people that don't know that a lot of their pension money and hedge fund money is in these highly illiquid private equity instruments, and it could be serious. I don't know what the impact is going to be. I mean, we've seen since December, Blackstone has had problems with these commercial real estate funds.
And so I think the most recent I saw they suspended withdrawals as people were trying to get out, and so like that's going to definitely linger. And that's all leading into the later this year, where perhaps that the commercial real estate debt bomb implosion might be the next fuse that's lit on the other end. Because if the banks was on one side, now we got the commercial banks on the other side. Like how does this meet? What does it meet up to or equal up to in the middle of all this? So that's going to be something definitely worth paying attention to. So commercial real estate. All right. So I just wanted to mention that just because I forgot to touch on that earlier. Jay Jones says, I mean, guys, what is the end result of all this destruction? Do they want us to microchipped and brainwashed and in concentration camps, tracked and traced and vaxxed? The U.S. is collapsing. That's a great question. What is the end result of all this destruction? Yeah, and that's there's a lot of theories for that.
Yeah, I mean, monetarily and financially, it means that they might be able to keep things looking good, the bond market, the stock market. But the real bad thing that's happening is that the dollar is buying less and less, the pound's buying less and less. All the fiat currencies are dropping because the only way to keep this game going is through more and more debt, more money printing, more deficit spending. As per the other things he said there, I'm not too sure. I try not to worry too much about that because that's what they want us to do: worry and be fearful and think that they're really all powerful, that they can do those things. And personally, I think they're going to fail.
Yeah, I hope they do fail, and we'll have to wait and see. But I see in the comment section, people are talking about selling some silver if it gets to 50, and I even heard one of the commentators talking about having been in the industry so long that if it gets to a certain number, he's going to take some profits. And I'm thinking like, I don't know about traders take profit. I'm like, just if it gets to a certain number, like,
well, I mean, take profit. In what?
You're saying if silver. I think it was James Anderson from SD Bullion. He was interviewed. He mentioned that.
Yeah, I know, but maybe if you need to have an emergency, sell it at whatever. But it's like in Venezuela, in the run up to the hyperinflation, the people saw gold and silver going up. Oh, I'm going to take some profit.
Right.
And then a month later, the
double, triple
that took the profit in is. I mean, I would maybe look, but silver, if it gets to 50, it's still the level that it was in 1980. Mm-hmm. So maybe if oil is at $10 when silver's at 50, maybe sell some silver and buy some oil. But don't keep the fiat currency. What's the point
Right,
of keep?
and that was the whole point. Like, you're taking profits back into a fiat currency that is being exposed as the primary problem. Is like, I'm not too confident in that. But I'm curious. I didn't get your thoughts on the whole Texas bill. The two bills is put forward about creating a state-issued digital currency backed by gold. And of course, it's a long shot more than likely. But just the fact Texas and Florida seem to be leading the way to counter that potential CBDC that's being rolled out here. Do you see this type of activity picking up and being able to get some traction, give and take all the stuff that's ahead of us?
Definitely. I think in Texas there's a gold depository.
Mm-hmm.
So that's an interesting one. We'll have to see. I mean, preferably we shouldn't have really a gold-backed currency. We should just use gold.
Right.
But
gold would be ideal.
People think it's too cumbersome, but how did people manage for 2,000 years, using gold and silver? Why can't we? Up until the 1930s and even the 1960s, we used to use silver.
Mm-hmm. Yeah. It's not too hard to go backwards. So the reason I mention that because low blood pressure says there's always a safe haven country when calamity happens. I'm betting on Texas.
Texas is going to join the BRICS, isn't
it? Yeah. Abbott put in an application to join the BRICS. That'd be something else. I mean, I don't know. That's not even possible. But just that thought of that is like, that's different. What else we got here? So a lot of talk about different prices and stuff like that for silver, man. Somebody said about Libertads are $50 an ounce, and the buyback is $26 or something. That can't be real. What else we got here?
Well, you have to try to sell it privately. That's the thing.
Yeah. So what do you see in prices wise in your neck of the woods, as far as premium wise?
Yeah, the premiums are pretty high, and I saw the other day one of the big dealers here. I got an email, and they said we're paying 10% over for silver if you sell it to us, 10% over spot.
Yeah.
So, but I think people worry too much about premiums and things like that. Mm-hmm. I just worry about being able to stack. I think that's the key thing. Unless, of course, you want to trade physical, which I don't really recommend. It's there for a rainy day.
Roxy says, your thoughts on investing with Noble Gold? I am not familiar with Noble Gold, Roxy, so I don't know much about them. Never heard of them, so I don't know anything about that. If anybody in the chat know anything about it, feel free to let her know in the chat. Matthew, another question.
Is that a mining company?
Noble Gold.
Mining company? I don't know.
Noble Gold.
I don't know. I've never heard of them.
Looks like Noble Gold Investments. And so it is not a mining company. The leading gold and silver IRA company. Yeah, so IRA company. Yeah. Don't know.
No.
Definitely check them out before you go that route. Matthew says thoughts on how money market funds use RP high interest rates for better return on investments in relation to siphoning money from regional banks.
You mean reverse repo? Yeah, I mean that's what they do. The money market funds, they take their their U.S. Treasury securities, and they lend it to the Fed, and the Fed pays them an interest. I think that's the reverse repo. Yeah.
Okay, good stuff there. I'm not familiar with that.
And a lot of that money is coming from the regional banks. People are putting money into money market funds.
Low blood pressure says, question, when are you guys going to use credit cards for precious metals?
No.
What else I heard? Let me see. Don't buy.
Well, I could use a credit card, but I would pay it right off. See, I don't like having a.
Yeah, LBP. He maxes one and gets another max one and paid out max. But so yeah, he's the credit card guy. Somebody says noble gold, stay away if you don't hold it. Yeah, counterparty risks. Expect, risk to intensify moving forward. We already saw the risk in the different financial sectors with the crypto FTXs, and we saw SVB risk, and yeah, there's gonna be some risk out there with a lot of metals companies, I'm sure.
Someone mentioned the Mexican peso, that the dollar is dropping against it. Yeah, and it's true, because I've looked at that. In the last 2 years, the Mexican peso is the best performing currency, and so is the Brazilian real. Brazilian real is like the second best. So
what about the Russian ruble?
Huh?
What about the Russian ruble?
No, not the Russian ruble. More the Mexican peso and the Brazilian real. It's more because they started raising rates in 2021 when inflation started picking up a lot quicker than the Fed. Yeah. And their rates are a lot higher than their inflation rate, which is how it should be, and that's why the peso and the real are quite strong.
Let me check this out.
If you look at the Mexican peso the last 2 years, it's actually done quite well versus the dollar.
Yeah, pulling up here now.
Yeah, I see the US dollar has dropped.
Yeah. Interesting.
Yeah.
Let me reverse that. Yeah, okay. All right, so that's a good thing.
It might be also a lot of Americans wanting to move to Mexico.
It's a flood of expats down in Mexico these days.
Well, could be.
Well, I can play it back. What else we got here? The dollar won't crash till we severely depreciate it. Yeah, the USD is going to be around.
Oh yeah, like the British pound is still around, but
right, it's going to be around.
One pound used to be almost $5, and it's now like 1.2. But
all right. Well, I don't see any more questions. We're approaching at almost 36 minutes, give or take. So what's coming up in the near future to keep an eye on, according to what you're watching from your neck of the woods?
Yeah, I mean, like you said, I think there's a Fed meeting next month.
Yeah,
but I don't know. I think we need to keep an eye on Japan. The Bank of Japan, even though their bond markets seem to be under control. There's nothing really that I see in the horizon, but I think the interesting development is commodities. That chart you showed of the oil price, that's happening to the CRB index as well, which is a commodities basket. So yeah, I think that will be interesting to look at, and the fact that the strategic petroleum reserves of the U.S. were depleted so massively, and they haven't replenished them. And now with oil prices going up, it's going to be a real problem. And I guess all the political division in the U.S. and all the political chaos in Europe as well, in France, all the protests over there. That's the other thing to take into account.
Yeah, I'm keeping an eye, or I will be keeping an eye on, especially in May, with the Arab meeting, the Arab summit, and so Saudi Arabia is brokering a lot of peace deals. Apparently, Assad is going to be going. Saudi and Iran just met last week, so it's like all this peace in the Middle East. They're working on something.
There's a ceasefire in Yemen as well, the Yemen war.
Right.
Yeah. So that's another thing to keep an eye on. More announcements from the BRICS nations and those who want to be part of BRICS.
Right. So definitely it won't get talked about much on this hemisphere here, but it's worth keeping an eye on, just because whatever comes out of there will definitely impact the West, and especially the dollar. So there's going to be some announcements pretty soon, because the BRICS summit is in August. So heading to fall, and this next time when this mild recession start, the world might be announcing something. So we'll see. But of course, the price of gold and silver will be reflecting upon these announcements, I'm sure. So, and won't be going down, I don't think, but we'll see. Anyway, All right, well, everybody, be blessed, be safe. Hope you have a great weekend. Get out, enjoy some sunshine wherever you're at. Smile, be a blessing to other people, and just enjoy life while you still got it. So that's pretty much all I have to say. And other than that, be blessed, be safe. I'll see you guys later. Peace.